All right, good afternoon, everybody. Here's a quick trade recap. A 0 days to expiration Ironfly, or it's Iron Condor, where the soul strikes are the same, that we did in the small account mastery. Quick trade recap so everyone can see what we did. Let me get the screenshots and talk about everything else. We'll see. Sorry, I'm pulling it up right now. I wasn't expecting that to go away. Okay, there we go. Okay. So what I'm going to do is minimize this. So first, what you can see is we're in our 40-15 Ironfly. That was 25 wide because it was 25. The expected move was 25 points. It was 23 points. We made it 25 wide. And just so you can see here what it looked like. So at almost 9 o'clock, 30 minutes after the open, entered the position for $5, or sorry, $5, $15.70 a credit, and then shortly after closed it for $11 debit. So we locked in a little over $4, which was 50% on the risk. So if you think about this, the risk for one position is 930. We collected 50% of the risk versus credit received because the max profit on this is skewed a little bit 1.5. So we're risking 930 for a max profit of 1500. Will it pin there? Probably not. But you could obviously hold on to it all day, but I'm okay with the quick 50% on the risk. But let's talk about the setup. So I just wanted to show you what we did there. Now let's talk about why we did it. So this is what went out to everyone in the small account mastery. And it really wasn't complicated. It's going to be pretty, once I tell it to you, you're going to be like, oh, that's exciting, because it really wasn't overly exciting, right? So basically, the momentum was bullish on every time frame, right? We have a 15-minute squeeze that was slingshotting higher. The market was already up over 1%. The question is how high is it going to go? With the expected move of only 23 points, so okay, well, if we're up this high, do I expect it to hold? So here's the ES, as I do like to evaluate the ES as well because it can show where the SPX may go. So everything, like I mentioned, everything is on the buy side. We're all the way up here. We're up here at the third ATR on the hourly time frame, and we're oscillating. So we're extended, right? For a drama-free trade, like from here to here isn't very much. So that's why I liked the idea of the butterfly, which also offers much better risk management. All right, so here's the SPX. So with the bullish signals on the ES that came from the close yesterday and carried pretty much all the way through till the open, which caused the gap up a little over 1%. The expected move was 23 points. We put on a 25 wide Ironfly with the bullish skew slightly because you can see how the SPX was at 40.12. We sold the 40.15s. Our upper break even is up here at H1, which it only closes above 24% of the time, but it will touch roughly 38% of the time. So that was the setup, right, on why we thought it was a great idea. Today, it's obviously price action's been in this zone, like we did pull back to the 30-minute 21 EMA on ES and also this little level support. And then it's just been oscillating since then. Relatively, I guess we call it a drama-free Ironfly. I don't know. But nonetheless, that's a quick recap. It did everything we were looking for. What a bullish skew based on our signals. Entered that trade based on the expected move. And the expected move is the market makers are usually right. So that was the idea there. But I hope this video was helpful. I'd like to do more of these. I was actually messing with a few things, seeing I was wrong on direction and whatnot, but we'll see if I show you what I've been doing. But everyone have a great day. I hope you are able to grab a piece of that, and everyone have a good one. Take care.